All right, a lot of you have been asking, what in the heck is happening? Was that the peak? Was that it? Have we topped? If you go anywhere on Bitcoin Twitter, people are just bear posting everywhere as if the world is ending. But is it? Today we're going to go into both the micro and macro side of things and take a look at what I think is driving both the action that we're seeing currently and what we will see in the coming months. And again, many of you watching, I know, are sort of long-term hodlers, and you're like, what? It's a pullback. Like, this is what Bitcoin does all the time. But I do still think it is helpful, and for an increasing number of you who may be more and more sort of all in on Bitcoin, right? And maybe you're like literally borrowing against Bitcoin for life expenses or whatever, the cycle turns start to matter a lot more, like the more allocated you are to Bitcoin. So without further ado, let's take a look at what is going on. Okay, so as you can see here, we've got the price of Bitcoin denominated in US dollar funny money. And you can see this peak here of October 6th, right? And people are looking at that saying, hey, whoa, you know, was that the top? Right? And if I look at this on a longer term time horizon, people are saying, hey, there was this sort of double top here, you know, maybe here's a little double top here. Like, is it that? Like, is that it? Are we done? Right? And, you know, zooming out is always helpful, as you can see. But there's a lot actually that's happening. And a lot of you watching this may not even be aware if you're sort of like, Bitcoin hodler, don't care about anything else. But as it turns out, the broader sort of crypto market just nuked in a humongous way, right? So this was last Friday. I'm recording this on Thursday the 16th, so sort of the following Thursday. But last Friday the 10th, we saw the single biggest ever liquidation. So liquidation, for those not familiar, if you are a trader and you're sort of longing or shorting, so you're kind of in either way taking on leverage to borrow your way into a position, you have some form of collateral that is backing that position, and if the trade moves against you by a certain magnitude, then you may get liquidated, your collateral may get sold off to extinguish your leverage that you took on to initiate that position. Now, to be fair, you would expect that as the total crypto and Bitcoin market cap continues to increase over time, you would expect these like biggest liquidations to also increase over time as well. So that is, you know, sort of partly what we're seeing, but still nonetheless like astonishing numbers, right? 19 billion just poof vanished in the span of like a few minutes, you know. And what happened was that late on a Friday afternoon, so sort of a strange timing for all of this, right as you're going into markets closing, you know, low liquidity. So any big moves are going to be that much more magnified. And we had this announcement from Donald Trump announcing that there would be 100% tariff on Chinese imports commencing November 1st. So he put this post out last Friday, and markets absolutely nuked. Like, we're talking 70, 80% down for certain altcoins. Now, Bitcoin was down probably from about 120-ish thousand to about 102,000. So basically like a 20K negative red candle. It closed a little bit, you know, higher than that. But even Bitcoin, like, that's a pretty big move. Now, again, unless you're checking prices every day, you know, you may have woken up the next day and said, oh, like, Bitcoin's down a little bit. But what actually happened was absolute carnage. And so what actually happened here, and why might it be relevant? The thing that's really interesting is leading into that announcement and crash, you oddly had World Liberty Fi, so this sort of entity associated with the Trump family, you had someone massively dump and sell off World Liberty Fi, right? And then subsequently massive dump for the broader market. So what does that tell you? It tells you that there was potentially insider trading. Someone knew that this announcement was coming and basically front ran that. You say, okay, well, it was the case that China had been reporting deterioration in these trade talks between the US and China even earlier in the week, right? Thursday, you already had some chatter, at least in China, about this. So, I don't know, right? You could say maybe, maybe not. But it gets worse, right? It also turned out that this trader opened Hyperliquid accounts. If you're not familiar with Hyperliquid, it's a decentralized exchange where you can trade perps or perpetual futures contracts. So you can take leveraged bets on the direction that you think a particular asset like Bitcoin or others is going to head. That account was opened like the same day. Okay, so same day, they opened trades 30 minutes before the tariff announcement, and then closed the trades for a massive profit. Okay, not great. They were placing shorts up till exactly 1 minute before Trump posted his 100% tariff on China post. So not great, right? Clear evidence that there was insider trading. Okay. So the important thing to be aware of is that markets, one, there are big, powerful actors. There are insiders for sure, and they want to shake people out. They want to shake you out of your Bitcoin. They want to acquire this asset for cheaper. Okay, so you're going to see these shakeouts all the time. It happens all the time. And it doesn't even have to be political. It's often market makers or Binance as an exchange. They trade against their own customers. So all this stuff is happening, right? But then it got even weirder, right? In addition to what was clear insider trading, during this chaos that ensued after that trigger of the announcement, you had a bunch of really strange technical issues at the exchange level, right? Like this sort of plumbing, particularly at Binance, points to something, as this user points out, something quite disturbing, right? Was this a coordinated attack? And I'll try and link this article. I won't go through all of it, but they're basically pointing out that you had some truly extraordinary movements on exchanges like Binance in particular. So when you see these massive liquidation events, you're typically going to see kind of everyone across all exchanges get wrecked. And generally that is what happened here. But there was particular carnage at Binance, and particularly for these couple of assets. And so what was happening was, these oracles that exchanges use to determine like what is the dollar price, what is the exchange rate of a particular asset, those went haywire. And what you basically had in a nutshell was traders getting absolutely liquidated, even if they had things like stop losses in place. So this is something that says, hey, I have an open position. If it's moved against me to a certain magnitude, go ahead and close it out, right? I'm going to stop my losses there. Those did not trigger because of how violent this crash was and because of how messed up some of these sort of technical issues were. Obviously, I'm simplifying for purposes of this kind of high-level video, but definitely multiple layers of funny business going on. So you quite literally had like top 100 altcoins go to zero. Like zero, literally, not the meme, but like literally zero. Cosmos, Atom, whatever was an example of that. So the moral of this story in particular is, as I think a lot of you watching already know, but like you are taking massive risk. Now, I do think some of these traders got even like unfairly ruined. Like they took risks, yes, in even placing these types of trades and even mucking around with, shitcoins in the first place. But they, had different things in place that like should have prevented these sort of catastrophic losses. So Binance has come out with this compensation plan and all this crazy stuff. So anyway, moral of the story one, why did I go through all of that in that degree of detail? It is that there are always these types of things happening, right? And you don't even have to, there doesn't even have to necessarily be a particular smoking gun. Like these different actors are constantly trying to press price in a certain direction to where it's going to liquidate the maximum number of people for the most pain and the most gain for whoever is doing that pushing, right? Often market makers, etc. And furthermore, it is yet another cautionary tale against doing these leverage trades, right? And you saw altcoin leverage in particular building up for many months over the last few months. And so when that happens, these big entities are like, this is dry kindling. Like, we can light this on fire and make a huge profit as all of those traders get liquidated, because what happens when they get liquidated is they unwind the trade. So if you had kind of borrowed to go long, you're now undoing that trade. You're putting even more sell pressure on what is already sell pressure, and so on and so on and so forth. And so that's why you have these huge kind of cascades. So that's moral of the story one, right? So the question is like, is that structural or fundamental to Bitcoin's value proposition? No, right? Obviously not. Did it shake the confidence of many participants in the market? Definitely. So that is noteworthy, and that's going to take some time, and you can see we're still chopping around. You know, Trump's gone back and forth and flip-flopped a bunch of times on the whole trade with China narrative. There was going to be the tariffs, then he came out over the weekend and said, hey, just kidding, guys. You know, me and Xi, we're buddies. Like, it was just a misunderstanding. You know, then he comes out early this week and says, nope, we're in a full-on trade war. So these are clowns, right? Like, these are professional clowns that are orchestrating and pulling strings to their various insider benefits, right? But then let's take a step back and look at the kind of bigger picture of like, well, you know, what else is happening at the more macro level?
This video is made possible by Bitcoin trading cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not gonna lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane. And I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Joltz. Here's to ripping packs and stacking sats.
And what I think is fascinating is this debasement trade, something that many of us have been talking about for a long time. All the gold bug folks are just, you know, absolutely over the moon right now. And so you have this debasement trade going mainstream. What is the debasement trade? It's essentially just a commentary on, you know, the US in particular, but Western governments more generally, the sort of fiscal strain that they find themselves in. You now have that being significantly compounded in the US with this great sort of reindustrialization policy. Like, it has become far more obvious just how dire the situation is in the US in terms of its ability to produce and source critical raw materials and, you know, just do stuff with those raw materials. You've heard the rare earth, right, you know, metals and materials that have been the subject of a lot of this debate between the US and China. China has a sort of stranglehold on that market, both in terms of the commodities themselves, as well as the refinement and processing of them. So make no mistake, that is a very real sort of issue at the macro level, even though it was also relevant at the micro level in terms of this trigger for that big sell-off. And so I think it's finally becoming more consensus of like, whoa, actually, this is urgent, right? And you see the US government taking positions in companies, particularly those that have to do with these different commodities. I think it's becoming more obvious to people. They're like, oh, this whole fiscal mess that we find ourselves in, that is only going to continue if we're trying to reshore and reindustrialize. And it's become obvious how imperative that is to people. Meanwhile, you also have this sort of slow motion reset of the monetary system, right? The current monetary system since 1971 is, dollar is a reserve currency, U.S. Treasury is a reserve asset, and, that's dictated much of what we've seen over the last 50 years. You increasingly now have these cases where major entities, businesses, sovereigns are pricing commodities in currencies other than the dollar. Like that was a sort of implicit agreement between the US and big oil producers like Saudi at the time. In the 70s, they said, look, we'll protect these trade routes and we'll make sure that your product gets to its destination, and we'll sort of help enforce, this global trade that's going to benefit, all of us. But in exchange, you guys have to sell this in dollars. Like that's the deal. And so that allows us as a country, as the US, to, way, way, way outspend our means when there's a sort of permanent bid for the dollar that offsets what would otherwise be a lot of weakness as a result of this, sort of flagrant, debt binge and spending and all this stuff, right? And the examples go on and on and on. You've got Russian oil being settled in yuan, being settled on a net basis in gold. It's very, very, very interesting stuff. Meanwhile, you've got, the Fed indicating that, hey, we may end the process of QT, basically, quantitative tightening. We may stop shrinking the size of our balance sheet. We've got global M2 money supply continuing to increase. All of that is to say, at the macro level, both in terms of narrative with this debasement trade, as well as just the very real facts on the ground, I think are becoming clearer and clearer to people. And that is why you've seen gold just absolutely rip. And it begs the question, so this is gold in blue, right? This is absolutely bonkers. And the observation here is actually a pretty interesting one. It is that you do tend to see this relationship between a gold run-up and then Bitcoin subsequent to that, right? And this individual is pointing out, it's usually about 90 days or so from the start of the gold move. And again, where do you exactly draw that is up for debate. But you can see like, hey, this gold move here was about 90 days where Bitcoin was just absolutely flat doing nothing. And then boom, all of a sudden, as gold levels out, you see this massive, massive run up in Bitcoin. Similarly here, even more pronounced here. Again, 90 days, gold just ripping, Bitcoin doing literally the opposite. And so people are always saying, oh, see, I told you so. It's not a good store of value, blah, 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 blah. But then you get these absolutely massive rips once gold takes a breather. And so the question is, will it be the same thing this time? We obviously saw that great relationship between M2, global money supply, and Bitcoin sort of break down, earlier this year after it had been so consistent. So like none of these squiggly lines and correlations on charts are obviously guaranteed to hold. But I do think there's a lot of basis for this, and especially when you have this sort of great debasement trade thesis and more people seeing Bitcoin for what it is, which is an even better store of value than gold. It's portable. I can move it at the speed of light. It's even more scarce, right? If I'm concerned about the things that I'm buying gold in response for, I should absolutely, no questions, be buying Bitcoin to protect myself. And I think an increasing number of people are going to recognize that. And so as that narrative is becoming more mainstream, I mean, you saw people posting queues of people in Australia lined up to buy gold. Like, that's a top signal if I've ever seen one. So I think you're pretty soon going to see gold take a chill pill. Gold is still great, by the way. Like, I think everyone should have some physical gold. But I think you're going to see gold take a chill pill. And I think you're going to see a lot of that capital rotate into Bitcoin. And I think you're going to see an explosive, probably end of Q4, maybe even going into Q1 of next year. I think that's going to be something that throws a lot of people off. What you have to think about is that the market has a tendency for max pain, meaning whatever you think is going to happen is probably not how it's going to happen. So right now, everyone having seen this huge nuke, at least in the broader crypto realm, and seeing the weakness, clearly, I mean, Bitcoin is acting right now, right this moment, very, very weak. Like, it looks horrible, particularly when you take the Bitcoin to gold ratio. Like, it looks like crap. And so a lot of people are going to say, well, the cycle's over. I don't want to be the last one holding the bag. Again, these are traders and people who are not, hodling like we are for, the long term or whatever it is. But even if you're a long-term hodler and you want to take a little bit off the table to, buy a house next year or like whatever it is you have to do, a lot of people are in that mentality. They're saying, oh, well, cycle might be done, so I'm going to go ahead and, kind of call it here, right? I'm going to throw in the towel here. Like, the market is going to love that. It's going to shake all these people out, and then everyone will be sidelined as we go for the actual parabolic move that I think is still yet to come. How far we go, anyone's guess. I made the prediction earlier this year that we would see 200K Bitcoin by the end of this year. I don't know that we'll quite get there, but I do think we're going to go above 150 in this next kind of major move up. That would be my guess, but it's anyone's guess. The other kind of factor that contributes to all this beyond this narrative dispersion is the fact that you just now have more accessibility. Morgan Stanley, a long time sort of bear around all this stuff, is now openly advising clients to allocate 2 to 4% of their portfolios to, Bitcoin and crypto, scarce asset akin to digital gold, right? Like that's pretty bonkers. Once that actually starts to, flow through some of these different wealth managers, Vanguard has been faced with tons of pressure from their clients of like, why will you not let us buy Bitcoin ETFs on your platform? So I think they're going to crumble here soon. So you have more and more and more ways that people can allocate to this asset. You have a wider understanding of what it is and what it means in the context of this like once a century event where you have sovereign, real sort of peril at the fiscal sovereign level. And what we just observed was this kind of classic shakeout event where it's like kill everyone, nuke them to zero, and make it that much easier for when we go up. Now, I personally still think we're going to see, again, think path of max pain. What is the path of max pain? I think the path of max pain is maybe some sideways chop for some more weeks, bore everyone to tears, make everyone think, maybe even nuke back down to like 100, touch 100. Everyone says, surely it's done. Surely it's over, guys. Ian, what are you, crazy? But make no mistake, I think that's the point at which we start to really move and groove. Another possibility I think about is like maybe the cycle is done. I personally don't think it is. I think we got one or two more left in us, meaning like one, this current one, and then maybe another one max. But there's also a very plausible argument that says, look, cycles are done. You have an increasing amount of passive flows coming into this asset that just doesn't care, that just bids indiscriminately. And so the alternative max pain path is we just sort of like slowly grind up forever, right? Like pretty boring, no huge kind of parabolic bull run, no huge kind of bear market drawdown. That I think would be another example of like a max pain path. So it's going to be one of those two, in my humble opinion. What do you think? I'm curious to hear your thoughts. Again, it's always fun to speculate a little bit on price, but the very real implication of this is thinking about how you can, especially as we go into this age of AI and unemployment looking pretty bad, like how can you ensure, income for yourself, for your family, stacking sats continuously, maybe being opportunistic depending on kind of what we see with pullbacks. But I'm curious to hear what you think. Leave me a note in the comments down below. But I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like, share this with someone that you care about. That really does help get this to a broader audience. And if you're so enamored with this content and you want to donate to a pleb, you can do so in a number of ways. There's a YouTube Super Thanks feature built directly into YouTube, or my preference, you can zip some sats my way over the Lightning Network to my Lightning address, ragermajor@getalby.com. For those of you that do want to get in touch with me one-on-one, I work with quite a few folks on Bitcoin self-custody, privacy best practices, multi-sig setup, running a node, all sorts of topics. You can reach out to me at vida.io/IanMajor. But for now, we'll go ahead and leave things here. I'm excited to see how things shape up the rest of this year, and I'll see you all very soon.